Hi. This is about the factors which influence the price of gold, which actually drive the price of gold. And surprisingly, none of them, even though India is such a large consumer of gold, none of them are related to India. So the first and most important factor which affects the price of gold is the value of the dollar against the euro or the yen, or against the basket of these major international currencies. So when the dollar becomes weaker against those currencies, the price of gold tends to go up, and this is something which every investor should track. The second and very important factor in this is global interest rates. So for example, over the last several years when global interest rates have been low, almost tending to zero, we have seen the price of gold soar. And this is because money therefore does not go into your traditional fixed deposits because there's no return there. It simply flows into assets like gold. The third very important factor is inflation. And the inflation, again, we are talking about global inflation. So as long as there is a threat of inflation increasing, which was the case when the global stimulus was being applied, then the money flowed into gold because gold has traditionally been an effective hedge against inflation. And this is particularly true for India. It has worked well. And finally, there is the security situation, which is whenever there is any tension, so it could be in the Middle East, it could be in Nigeria, it could be with our neighbors or anywhere in the world, then this creates a fear psychosis where people want to put their money into an asset which can be liquidated anywhere in the world, and that of course is gold. So while these are the four key factors which influence the price of gold, we are still talking about the dollar price of gold. And of course, India produces little or no gold at all on its own. So all of it is imported, which is why the dollar price is important. But there is one final factor here which we need to take into account as Indian consumers. And that is the devaluation of the Indian rupee against the dollar. So even though if you look at the last 30 years, the price of gold in dollar terms, in 1981 was about $800, it peaked and then it went down all the way to about $300 and then it's gone up again and now it's at about $1,200 odd. So in spite of this entire cycle, if you pick any 5 years in India where you had invested in gold, you would come out with some return which would be positive. And that, I think, is reason enough for anybody in India to buy gold.